Hello traders, Gary Wagner here for Trending Markets just after 11 o'clock in Honolulu, 5 o'clock in New York. It is the last day of the month, last day of the quarter. It is the 30th day of September. We do have a nice rally, a sustained rally that really began yesterday in the equities markets after falling down and finding some support in the Dow Jones Industrial Average, roughly at 1,600, that has taken the average up about 235 points on the day. Now, we do have an interesting pattern that we have identified, as well as some real potential support at about 1,600. Now, one day does not make a turnaround, but it's certainly the signs and technical indicators that we really needed to see to be able to believe and postulate that we could see this market head a little bit higher. I draw your attention to this daily chart, and on this daily chart, when we look at the last three candles, we can easily see that we have a pretty strong case to be made for a three-river morning star. Long red candle, star, long green candle. Accompanied with that is when we take a look at the most recent lows in this market, roughly at around 16,000 on the Dow Jones Industrial Average, we can see that we have had pretty good support on a number of occasions. So this is certainly an area that we do want to look at. Now, the correlative in the Standard & Poor's, and let's go ahead and pull up our Standard & Poor's E-mini. When we look at our daily chart on this particular market, we get the same pattern forming, and that is a three-river morning star. We had our shooting star really cap the top of this market as the market traded just above 2,000 on the Standard & Poor's. That took it down to some lows, and those lows really found support at around 1875 in the same way. Of course, the market did trade substantially lower when it plunged just a couple of weeks ago. But if we look at the real bodies, meaning the distance between the open and the close of these trading sessions, we can see real support here, as well as here at the level of approximately 1875. Now, of course, those levels did hold, and we did have the market rally off of this particular price point, as I said, up till this shooting star when we hit a high just above 2,000 on the S&Ps. From there, we saw the market obviously trade substantially lower over the last few weeks, but during these last three trading days, and again, I draw your attention to the closing price as opposed to the lows that were hit. Of course, you had this low definitively below 1875, but the real bodies once again managed to close in this area, even yesterday as it closed slightly higher on the day. So what that really means, if we can hold this area, and of course, as you know, to really see this market move higher and get some sort of confirmation of this three-river morning star, we would need to see tomorrow's trading activity be a pretty positive update with a higher high and a higher low. We currently have real resistance in the market probably at 1930. That's the 61% retracement. 1966 would be minor as a 50% retracement. 2002, which is just below the recent high that it made at the shooting star, which I also believe was the concluding part of a fourth wave. So the way that we're looking at it is this is a wave 3 down. Our counter wave 4 up concludes with a B, and then our C. And now we're moving into, I believe, the final legs possibly of this marketplace kind of washing out. Now, we might obviously get one more move down to test these lows and conclude this fifth wave. But at some point, and I believe probably the first or second week in October, I believe we will have washed out the bottom, and it will probably be time to enter this market for a sustained rally to the upside. That being said, we want to watch carefully over the next couple of days to see if we get some sort of support or a little clip up. But as I said, traders, if we are in the fifth wave, we probably have a little ways to go to the downside before finding a bottom. But I truly believe that we will see some sort of a bottom in the equities markets, and that bottom will come in, as I said, in terms of a time parameter, fairly short, maybe by the middle of October, meaning the second week of October. As far as crude oil goes, crude oil was in essence unchanged today, trading up about 13 cents, which is really not much of a range, but we are really still consolidating. And also, as we talked about, we have this flat bottom with real support at 44, but we do have this ascending set of tops. So we want to see how it reacts and how it breaks, because once we see which way it breaks, I absolutely believe we're going to see a sizable move in crude. And traders, lastly, I do want to take a look at the Standard & Poor's. This is from a weekly chart. And when we, obviously the week is not over, we have a couple more trading days, but we're getting this extended, exaggerated low, very similar to the exaggerated low we got when the market actually sold off. And I believe that that could absolutely be signaling a level of support in this area, and B, the final leg to the downside. And as I said, I would look for this market to bottom over the next couple of weeks, and then we'll have a play to the long side. I think that that is the most logical next trade in terms of our Standard & Poor's, is to make or watch the market to get signs of some bottom activity first, second week of October, and from there enter the market through options and straight E-mini futures on the long side. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update review. Bye-bye.